Hey everybody, good to be here today. My name is Brent Morse. Time to get to know Schwab.com a little better. Today we're going to talk about fundamental analysis on Schwab. And here's the thing, I want to be very practical about this. I want to show you kind of how a trader, an investor would actually use Schwab.com. But I also want to show you both how the platform works and how to practically implement that information on the platform. So we're trying to do both here. Now, if you're interested, I also post on X, formerly known as Twitter, a fair amount. @BrentMooreCS is my X handle. And I invite you to join me there. And whether you're watching live or on recording, hey, we just love to have you. Doesn't matter to me. Glad you're here. Before we get too far into this, though, let me just mention that the information here is for general informational purposes only and is not a recommendation of any security strategy or chart type. Investment returns will fluctuate and are subject to market volatility. And so be aware of that. Options carry a high level of risk. I'm not planning on dealing with options today, but hey, you know what? Stocks have risk too. All investing involves risk, including risk of loss. And no matter how much time you put into your research, sometimes things go south on you. That's a sad thing, but it does happen. The securities I'm going to use today are not recommendations. We'll be looking at actual securities, stocks that you can trade, but they're just examples. They're not they are examples. They're not recommendations. And there we go. Okay, so just be aware. Thanks for joining me. And let me just also mention here that Connie is in the chat. Connie Hill. So Connie puts on a lot of great webcasts throughout the week. Encourage you to follow her on X as well, @ConnieHillCS. Notice when I say @Connie Hill, it's not @Connie_Hill or anything. There's no underscores in those X accounts. Sometimes we get these imposters that are just not, they're out for no good. And they put underscores in there. So it's @BrentMooreCS, @ConnieHillCS. So there we go. Let's head on over to the Schwab.com website. And I clicked on the wrong thing. Let's try that again. There's the Schwab.com website. Here's today's market action. Dow down a little bit. Not a big change, not big mover in the market. We had kind of a CPI report that came in a little bit hotter than I think people wanted. So that didn't help. We were down for a good portion of the day, but we've actually rallied a fair amount at close. So let's talk about where to find some essential fundamental information. I want to point out what's kind of more important and less important, perhaps, at least to some traders, and how that information is used. We're talking about fundamental analysis today. If you're interested in technical analysis, you know what? I did a class just a couple weeks ago, in this class, on this webcast, a couple weeks ago, on charting on Schwab.com. So if you're wondering, like, what is technical analysis? What's fundamental analysis? Technical analysis is looking more at charts. Fundamental analysis is looking at more fundamental data. We're focusing on the latter right now, but if you want that charting session, I put a link in the chat if you're watching live. If not, just go to YouTube. Just go to YouTube, go to the Trader Talks channel. Trader Talk Schwab channel on YouTube, pull up the playlist. There's little tabs. One of the tabs says playlists. Click on that tab and you'll see the playlist for this class and you can go back to past sessions there. Now, for our examples here, this is what I'm going to do here. I'm going to start just to kind of show that I'm not, trying to recommend a stock. I'm just going to start with the top one on the list here, the alphabetical list, and that's Adobe.com. And I want to go through some fundamental analysis on that class and just talk about maybe some best practices, so to speak, in terms of fundamental analysis. Now, some of you hear the word fundamental analysis and you go, your brain just shuts off. You go, I don't want anything to do with fundamental analysis. Let me tell you a quick story here, and I'll be brief. When I was in 5th grade, my teacher gave me this assignment. And on that assignment, my 5th grade brain was overwhelmed by this assignment, and I didn't know how to do it. And so you know what I did? I didn't do it. I just didn't turn it in. Now, the teacher, I think, reminded me at some point, and I didn't do it. And eventually the teacher told my mom. And my mom came to me and said, why haven't you done this assignment? Now, I don't remember the exact details because, let's be honest, that was the better part of a half a century ago. But in any case, the bottom line is, when I sat down with my mom to do the assignment, I realized it was really very easy. What I had in my brain was an impediment to me actually doing it. Sometimes you just got to do it, and your brain can sometimes make things more difficult than they are, just by your preconceived notions. Fundamental analysis is not that bad. You don't have to be an accountant. You don't have to be a CPA to do this, a financial analyst to do this. We're going to go through some basic steps today. Okay, so that's something I want to do. In general, with our fundamental analysis, what I would say is, very often we'll look at a stock, we'll look at a company, and we'll say, a certain metric, and we'll say, is that metric good or bad? Okay, good or bad. Now that's easy enough. Maybe we say a stock that's losing money is not good. We'll throw that more in the bad category of what we want. And what we really want is we want a stock that's making money. But more often than not, it's not strictly a good or bad measure. More often than not, what we're going to look for is the trend. Is the trend going up or is the trend going down? Okay, the trend going up. That's the measure. And for a lot of things, we want that trend to be going up. Okay, earnings, revenue, cash flow, things like that. We want the trend to be going up. If the stock, maybe some things you want it to be going down. Maybe we want debt to be going down, right? So generally, we're going to look at the trend, probably more so even than the whole just measure of good or bad. And another thing we can do is we can compare it. We can compare it to either a peer or as the industry group as a whole. Okay, so those are going to be the main principles of what we're dealing with fundamental analysis here. These three things: good or bad, trending up or down, comparing. How does it compare to its peer or industry group? And then the final thing I would say is this: look at the whole picture. You know what? Every stock is going to have shortcomings. Every stock is going to have good points. So we're not just going to look at one data point here on this. All right. So let's do this. I'm going to go to Adobe. So I'm just going to click on the ticker for Adobe, and then I can just click on where it says Adobe. That's the first one on our list. And this is, I think, a pretty good example of something that is kind of this is a larger company. It's one that most of you have heard of. And I want to go through some of the areas here that we may consider on Adobe as a stock. Now, I'm not talking just from a growth standpoint or a value standpoint. I want to run the gamut here and talk about these different aspects. Now, obviously, if you're a growth investor, you may focus more on some of the growth aspects versus value aspects. Now, one area, in addition to the basic data on the company here, which tells us what group it's in. Adobe's in software. Now, you may already know that, but maybe it's a company that you're not as familiar with. You can read about it over here under company profile. If you want more, click on read more. But one area when investors often will focus on in terms of starting out your research is, what do analysts say about that company? Now, caveat here. Analysts get it wrong, okay? And so it's probably not going to be your only measure. I'm not going to talk about individual analyst reports here. I'll let you go through those individual analyst reports. What I'd say, though, is analysts can give you more quantitative information, which is a lot of what we're going to be going through today, but also more color commentary or more qualitative information. And for that, you can click on any of these individual reports. Here's an individual report or an individual report, individual report. I'm not focusing on any of these, but just realize this may be a starting point where, not so much in the trend area, maybe there's a certain cutoff level and the ratings that you consider there. So that's the first thing I wanted to mention is a lot of investors will start off with this analyst report. Now, I'm going to scroll down the page a little bit. As I mentioned a couple weeks ago, we talked about technical analysis. You can use the chart for that. I'm not going to actually get into that much today because we've already done that. It's not really the topic. But if you want a bigger chart, you click on Show More. But I want to focus on the right side of the page for some more fundamental information. And what you can see over here is you can see share profile. Something you may be interested in is how big is the company? This is a big company, Adobe, $217 billion company. Now, companies, technically, I think most people define large cap as big, more than $10 billion. But, this is a bigger company. That may not be a yes or no thing on a company, but just realize the bigger companies have more eyes on them, more institutional in ownership, in fact, and you can see that the shares held by institution. What is the implication for that institutional ownership that you see there? Well, when you have high institutional ownership, we'll say 80%, let's say, this is over 80%. That means a lot of, it's mostly held by institutions. This one isn't slipping under people's radar, and that may be some good and some bad. And on the good side, it means a lot of people are, it's less likely perhaps to be a surprise and have something that is unexpectedly bad on it, perhaps that you don't know. It certainly can still happen. I mean, Enron was a big company and it had something really bad on it. But it's also, some investors like to find those, diamonds in the rough sort of thing, those hidden gems. Well, this isn't very hidden right now. A lot of people already know Adobe because of the size of the company, and a lot of institutions own it there. So that's one thing you may look at is, as you're starting out your fundamental analysis, is just how big the company is, how many institutions hold that. Another thing is, how much short interest is there on this? You'll see this listed right here in terms of short interest. What's short interest? Short interest is basically the number of investors who think Adobe's going down. They're making bets, so to speak, against Adobe's share price. The higher the short interest, the more people that are thinking Adobe's going to go down. Now, here's your percentage of short interest, shares outstanding, 1.5% essentially there, okay? Is that high, low? That's on the lower side, okay? That's on the lower side. I'd say most investors would deem that to be a positive thing for a company for it to be that low. Now, you start to get a short interest level that's, maybe above 8%, 10%, that would be a big red flag for a lot of investors there. Doesn't mean just because it has a lower short interest that the company is going to do well, and vice versa if it were high, that it's going to do poorly. But this is a starting point. Typically, not just on this side, but other sides, you may see short interest expressed as a percentage of shares, also days outstanding right here. Then this is basically saying the number of days of normal trading volume it would take to cover, if everybody bought, to cover all the short interest, to buy back all the short interest there. So you can look at it both ways. 1 or 2 days is relatively low. 1 or 2 or 3 or 4% is relatively low here in that. Okay, and if you have any questions, feel free to type those questions in the chat box. That's why Connie's here to help us out, and I'm here I'll keep an eye on that chat box as well. In fact, in that chat box, there is a survey link that I'd encourage you to check out. Now I'm going to scroll on. Let's look at some other fundamental data that's available to you on the Schwab.com platform. Dividends. This company doesn't pay a dividend, okay? Next company we look at, we'll make sure is one that pays a dividend, so we can look some more of that info. One thing I would mention here, though, when you're looking for fundamentals on Schwab.com, there's a lot of information that's not on the main page. In other words, you'll notice a lot of these, they have this show more. A lot of these sections, in fact, most of the sections have show more on them on the left hand. Okay, so make sure as you explore this, you click on that because that's going to give you more information I'm not going to click on that right now because it doesn't pay a dividend in the first place. So we're going to skip on that here. Now, the next thing, and this may be like the one of the main focuses of fundamental investors, is looking at earnings, not just what current earnings are, but what past earnings are. Excuse me, not just what current and past earnings have been, but also projections of future earnings. Okay, so we're going to focus on those two things, past and future. All right. So here we go. Upcoming earnings. Now notice this is quarterly. Quarterly upcoming earnings, 466. That is what is considered a consensus estimate, kind of an average estimate out there. Okay. Now, that's the average estimate out there. Now, I want you to look at this. This is kind of interesting, I think. Here's your high estimate, 472. Here's your low estimate, 463. That's actually a fairly tight spread. Not all analysts have the same idea of what earnings are going to be. And in this case, it's not a huge difference between those two. They kind of seem to be on the same page there on that. But you can see, here's Q4 expected or estimated earnings. Here's Q1 of next year expected. Q2. Do you see what we got here? We have a trend that's going up. I kind of graphically represent this with this bar chart, this histogram here of it going up. When I talked about earlier, when I said we like to see things trending up, or at least the good items trending up, earnings being one of those good items, we want that to be trending up. So I think a lot of traders would consider that to be a positive for the company right there. Now let's scroll down just a little bit here and go down to past earnings. Now notice this is just quarterly. We're going to get in a minute to annual past earnings. So we're zoomed in quite a bit here on this. But what we like to see is, again, that trend going up. And in this case, indeed, it has gone up in the past. Now, there's a difference between actual estimates and what the estimate is on the earnings announcement and what the actual is. In this case, you can see the actual has beat, you can see that right here, each quarter. It doesn't mean it's going to. I would say probably most investors will probably focus a little less on whether it beat on an individual quarter or not, although you'll see a stock react often quite volatilely to an earnings beat or an earnings miss, okay? But focus on I already said it before, the T word. The trend is what we're really focusing on here. There's the trend. Okay, let me mention a couple other things here. You can also see a PE ratio. Now, by a lot of measures, a 41 PE is a relatively high PE, right? So is this stock going to fall in the value camp? Probably not. Probably not. Not with the 42 PE. But one thing you can do is when you're seeing those PEs, particularly those higher PEs, is also peek at what the forward PE is. And what the forward PE is basically saying is, what's the PE based on forward, or in other words, expected earnings? And hopefully it's going to be significantly lower than the PE, the standard PE here. So we want this to be right down there, okay? There we go. So PE, forward PE, those are things I would perhaps focus on. Price to earnings to growth. Here's another kind of valuation measure, and this is basically taking that PE ratio. In this case, our PE ratio is, I'm just going to say 42, and we're going to divide that by its growth rate. Well, in this case, its growth rate is about a third of 42, and let me think, what is that, about 17, roughly 17, okay? Forgive my math, I'm going to round here just a little bit. But if a company is growing faster the PE ratio is going to, the PEG ratio is going to tend to be less in that regard. This tries to take into account the growth rate along with the PE ratio. But some value companies, our PEG ratio may be down closer to 1 than 3. All right, so let me get rid of that little drawing tool there. And let's move on down. Those are some main things that I wanted to point out on this page. But remember what I said. I said, click on Show More, because when you click on Show More, you're going to see some more information. Remember the T word I mentioned before, the trend word. We want earnings to be going up. Here's earnings per share. Well, we already saw that on a kind of a quarterly basis, but by clicking on Show More, we can see it on an annual basis. Okay, in fact, you can go back and you see the annualized growth rate there. You can see revenue. That's your top line, not your bottom line. That's your top line. You can see your revenue numbers are growing as well. We'd like to see both, actually. We like to see both. And this one looks a little different because this is an estimated. But again, the trend is going up on this. We can see cash flow. What's the trend doing? The trend is going up. So, and you can see those growth rates, 15%, 16%, 16%. Those growth rates are relatively, they're not astronomical. Hey, it's a big company. It's a, what was it, $200 billion company? It's going to be unlikely you're going to see 50% growth rates. Now, there's some exceptions to that. NVIDIA may have that growth rate, but even though it's even bigger, but for most companies that are bigger, it's hard to get super extraordinary high annualized growth rates, but that's still a reasonable number. Now, when you see growth rates that are down more in the 5% range, 8% range, probably going to be more of a value company where we're going to focus more on maybe valuation ratios or dividends or something like that, okay? So there's your growth rates. Remember, we're looking at those trends on that. Let me go back to where we were. Here's where we were. We were zooming down. We did earnings. That's the earnings category, okay? So that focuses on stuff, earnings, the money you're bringing in. So sales, earnings, the cash you're bringing in. Scroll down a little bit to peers and ratio comparisons. Here we're focusing on Adobe. Notice it brings in the other measure that I mentioned earlier. Not only are we comparing the company to its past history, that trend, but we're comparing the company to some of its peers. And here we can do so. And we can see, here's some different categories you can compare that company in. One thing you can see here, though, that is kind of an EPS thing still, that wasn't listed above, is the 3 to 5 year growth forecast. Okay? The 3 to 5 year EPS growth forecast. Now, that's probably important. Okay? I mean, if we want a company, we don't want just a company that's grown in the past, and we don't want a company that's just going to grow for the next quarter, expected quarter, but we actually want a company that's planning to grow, that analysts tend to think. The estimates are that the company is going to grow on into the future. So look, Adobe is less than some of these peers here. That's fine. It doesn't mean that it's not something we're interested in. Similarly, just because Adobe has a lower PE ratio than its peers, doesn't mean Adobe is something we're going to invest in. There's probably a correlation here between these two, okay? Companies that tend to have higher estimated growth rates tend to have higher PE ratios, okay? So there you go. That's that. Now, again, what we're going to do is I can click on Show More, and I'm going to go to Show More in a minute, but let me just point out this. there's more fundamental data here if you click on some of these other areas. Now, I'm going to click on this in just a sec, but let me just point out, we've got a PE ratio. You can compare it. We talked about that. Here's the dividend. We don't have a dividend. You can also compare profit margins. I'm going to talk about margins in just a few minutes, so I'm not going to dwell on that right here, but this is kind of a quickie that a lot of people care about. This overview, I think this kind of tries to pick out the highlights of some of these other sections. And one of the nice things of this is it gives you as much as you want. In other words, for a lot of investors, this may be all they want. For some, they want more. We're going to get you into and show you where that is. And if you really want to delve into the weeds, so to speak, on fundamental analysis, we'll get to it in a little bit. You can actually click on the individual, click on show more, and click on the individual financial statements there. Okay, but let's go on. Let me click on valuation. We can compare the valuation ratios of Adobe to some of its others, price earnings, price to sales. Okay, you can see where they compare price to tangible book, price to projected. This is the PEG ratio that we mentioned earlier. Okay, we can go to fundamentals, more information, return on equity. That is a very common measure that a lot of investors like to look at. Some people call return on equity kind of like a management effectiveness ratio. And again, it's one of those that is higher is probably better. I think most investors would say higher is better because it means it's the amount of return you're getting, but compare it to its peers. We're not going to look at it in isolation. Different industries have different ROEs. This is software. Software is typically going to have higher ROEs on average than, say, banks. Okay, that's a generalization, but that's how it is. So compare it to its peers. All right. Now, debt to equity. Okay, here's your debt to equity ratio. Again, this is one we can compare it to its peers. Some industry groups tend to have higher debt levels. We can do that. And there's your growth forecast. We already saw that. Let me go to dividends. Not much to see here. Adobe doesn't pay a dividend. If you're looking for a company that pays a dividend, maybe you would consider that. Profitability ratios. Here's these margins. I'm sure you've all probably heard of the word margin at some point. What's a margin? A margin is how much a company is making for different measures of their process. Let me just give you an example. Let's say we are making donuts. Okay, we're making donuts. We have a company that's making donuts. Well, you have your initial sales. Okay, you bring money in. Those are your initial sales, and then you got to pay money for like the dough and the batter and the sugar and the cream and whatever you put in donuts. And so there's a cost, what we call a cost of goods sold, and the amount of money you're making after you subtract out that cost of goods sold, that's what's called your gross margin. Now, that doesn't factor in a lot of other things. That doesn't factor in things like, how much does the overhead cost, or how much does am I paying in taxes or anything before this? Okay. So that's the gross margin. But then you're going to have other costs, and you may, after you subtract out some other costs, you may have something called, you'll see an operating margin. We actually don't show that right here. When we get to the bottom, we get to our net margin, and that's the one where a lot of people focus on, that net profit margin right here. And again, what are we going to do? We're not going to look at it in isolation. We're going to compare it to its peers there. So there's your net margin. There's a cash flow margin, which is basically taking your net margin and subtracting out the depreciation. You get cash flow margin. Again, higher is better. Compare it to its peers. All right. Now, let's keep on going forward here. Consensus. Analysts, right? Remember what I said? These are consensus analysts. I'm not consensus estimates, tallying up what different analysts are saying about them. They tend to, you can see buy, sell, hold type stuff right here. All right. Okay. So there's your analyst ratings. As I mentioned before, you can click on Show More and get more in depth. You can see a price comparison on those. You can look at your different areas down here, and you can compare one company to another in a little bit more detail here, including 1 year growth forecasts, as well as the longer term growth forecasts, and check out that information there. Okay, so I'm not going to spend too much time on this, but there is a key area on this page. And just to remind you how we got here, because it's easy to miss. When you're on peer and ratio comparison, if you click on Show More, click on Index Comparison. Okay? I click on Index Comparison, and then remember what I said? I said, yeah, we can look at the trend of the company versus itself. We've done that. We can compare it to some individual of its peers. We can do that. We can also compare it to a sector or a subsector here, okay? And this is what we have here. I can see where Adobe is compared to its sector. Now, why does this matter? Here's the thing. If I'm just looking at a PE ratio, and I'm looking here, I'm saying Adobe is kind of pricey, isn't it? Right? Well, yeah, it does seem that way. But compared to its sector, it's actually a little cheaper than others compared to its sector. Okay? And let's say return on equity. Okay? Return on equity, it seems very high compared to its S&P 500. But how does it compare to its sector? It's actually doing pretty well compared to its sector as well. Okay, so this page here, where you go and you can compare. You can throw in whatever else you want to compare it to up there. You can compare others in here, put them at the top of the page, and they're down listed as you go down the page right down there. Okay, so here we go. Remember, to get there though, you click on that index comparison link. So that's an important one to know there. Okay, so peers. Now we're almost near the bottom here of the page. I'm going to go to statements. Okay, now this is not. There we go. Just had to re-click on it. Here's your balance sheet. Okay, this is actually not a full balance sheet. This is just the bare minimum kind of parts of a balance sheet. If you want to see the actual details of a balance sheet, you click on Show More. You click on here, and it's going to show you all the little things in there. Buildings, land and improvements, machinery, equipment, construction in progress, and so on. Well, we're not going to do that right now. Because what you can do is you can click up here and get kind of the major categories here. Now, what are we going to be looking for in these? Remember, the T word, trend, the trend. We want this to typically, on most of these items, to be trending up, going this way. This is the most recent data over here. Well, debt, do I want it to be trending? No, I'm not. I don't want debt to be trending up. In fact, if anything, debt's been going down. But this is an example of one of those where I will see the debt's going up a little bit along with all the other stuff. And you're not necessarily going to disqualify a company just because it has one bad data point. Okay, it would depend on how much the debt's going up. And when a company in general is growing, which Adobe's been doing, sometimes they will take on a little more debt. It's not the end of the world. But in this case, it makes it easy because actually the debt's been going down. All right. And so same thing with liabilities. Would be kind of similar to debt in that regard. And that most of these others, we'd like them to be going up there. Now, that's a balance sheet. The other financial statements is, or you can click on income statement. Again, this is kind of a skeleton of the actual income statement. These, again, we want to see the trend. Cash flow, we like to see cash from operations to be going up. That's typically the one that people will focus on there. So that's kind of that's a view of a fundamental analysis on Adobe. Now you may be going, Brent, that takes a lot, a fair amount of time. It does take more time than looking at a chart in terms of technical analysis. But I would say this, if you're going to invest in $1, $5, $10, $30,000 in a company, then it may be worth the 10 minutes it takes you to go through on this and decide to help you make that decision. Now, in contrast, I want to show you kind of a different company. I'm not going to go through a little quicker on this one because as you go through it, I want to go in a little more detail in the first one. I'm going to go to American Electric Power Company. This is a new one. You can see that it's hard to see probably. It says new right down there on their list. But I want to show you this because it's a very different company here than Adobe. It's a utility company. Utilities, for the most part, have been doing fairly well. Little spike in interest rates over the past week or two may not, it probably haven't helped it a lot. But one thing you'll see on this is, well, we'll see it. Let's click on AEP. So I'm going to pull this up, American Electric Power. This is definitely not a software company. And one way we're going to see this is when you look down at the dividends. You can see the dividends. You can see the annual dividend yield, 3.6%, which is a pretty reasonable, sizable, but not extreme dividend there. And so one of the areas that I didn't show you on Adobe was this dividend area. You can see where dividends have been on this, but if you're a dividend investor, this is probably something you want to be aware of. Remember the T word, trend? What's our trend? Our trend has been going up, and you can see year to year what that dividend is. A lot of investors like to see that dividend go up. In fact, if the dividend isn't going up, some investors will say, if it is a dividend-paying stock, okay, if it is a dividend-paying stock, they like to see that growing. Now, here, let me give you a big warning on dividends. Dividends can be discontinued. Just because it's paid a dividend in the past doesn't mean it's going to continue to pay that dividend in the future. But for dividend-paying stocks, we like to see that trend go up. And furthermore, another thing often I like to see is they like to see this stat right here, the payout ratio. How much of the current earnings are they paying out in terms of dividend? Almost 70%, which is maybe getting a little bit on the borderline high range there. You don't want to be paying out too much of the money you bring out in terms of a dividend there. Okay, so that's something to be just to be a little bit careful there. But what we do want to see is you want to see that growth, the dividend growth rate. And you can see that down here. You can see those dividends growing for your dividend companies, something to check out right now. You can also, I'm not going to do it right now just for time consideration, but you can also pull up a chart on the company and look at the historical dividend payments on that chart. What do we want to see? You got it. We want to see that trend go up. Okay. Now, you can see earnings quarterly. This is a very different picture, isn't it, than what we saw in Adobe. Adobe, it was just like nice trend up. Well, Adobe is more of a growth company than this company. Just because we've been going sideways doesn't mean it's not going to be a good company. I don't know, but some companies are more this way, particularly if it's more of a value company, particularly if it's more of a dividend payer. You can click on Show More, and what we can see is you can see the year-over-year earnings growth rate. Definitely not in the growth category here on this company. Okay, revenue's been holding steady, more or less. Cash flow down a little bit. So look at those growth rates. Different picture than we had on Adobe. Okay, I want to go through, and we're just going to be real quick here on this. But EPS forecast, instead of 15% or whatever, I think it was 15%, we're down to 6% on that. But you're paying a dividend. And sometimes it's not just the company that you are looking at, it's considerations of the sector as well. Do you want some utility exposure in your portfolio? Maybe you do. If you do, this may be a starting point for you. Here's our company that we're looking at, but you may go, this is not, I'm not loving this. Therefore, I want to look at some other companies, some more of its peers. Okay, and you can go through the same process we did on Adobe. I'm not going to do that again, but just realize that you can do so. You can see there's a section for ETFs holding this company. I'm not going to go to that right now, but if you are interested in that, here's your short percentage of shares outstanding, relatively low again, relatively high institutional ownership, and there's your analyst ratings there. Okay. Now, let me just see, is any questions I missed pertaining to what we have here today? I'm not seeing any. Thank you, Connie, for helping in the chat. Thank you for joining me. And what I would suggest is this. Number one, don't be intimidated by fundamental analysis. Just take a look at the data. Go to the page I just went to. You just pull up a symbol, go down the page, click on the show more on some of these areas, and you're going to get some good information about those companies, especially those companies that you are planning on holding for more than a short-term trade. A lot of real short-term traders, maybe you're doing a shorter-term option trade or just a shorter-term stock trade that you're only going to be in for 2-3 weeks. Maybe less emphasis on the fundamental analysis, but for your longer-term trades, check it out. Try, your Schwab.com is a great source of a lot of fundamental information for you. Okay. Hey, thanks for joining me today, everybody. Thanks to Connie as well. And we will see you all same time next week. Remember, there's a survey link in the chat too. Bye-bye, everybody.